It's about that time of day again. Welcome back to your nightly newsletter, boys and girls. Joseph James here. It's Wednesday evening, June 8th, 2016. We got some great opportunities waiting for us in tomorrow's session. All four, crude, S&P, gold, and euro, all four of our markets are bullish and trying to retest their highs. We got some exhaustion moves. We got some triangles. We have some traps going on right now. Very exciting newsletter for you guys tonight. Lots of learning opportunities tonight and hopefully some earning opportunities for you tomorrow. Before we jump into our charts, though, and take a look at those strategies we have going on for tomorrow, I want to remind you the only place to watch the full-length version of this newsletter is on our trading blog here at sidewaysmarkets.com. If you're watching our video right now on the YouTube channel, this is just a small portion of the entire video. Follow the link in the description of the YouTube video. Come over here to sidewaysmarkets.com and watch the full-length version here on our trading blog. While you're here, don't forget, grab a free pass in the upper left-hand corner. If you're not an advanced member here at School of Trade and you'd like to grab a free pass, come out and join me in the trade room as a guest. Don't forget to grab your free pass in the upper left-hand corner. Also, make sure you join the mailing list in the lower left-hand corner, right above my ugly mug. You'll see a spot to register with your name and your email address, and I'll send you an email every evening when the nightly newsletter video is ready. Also, right below the video tonight, you can download all the charts you see using in tonight's video. Follow that link that says click here to download today's charts. And over on the right-hand side, don't forget to join the trial membership. We have a great free trial here at School of Trade. As I always say every evening about this time, you're going to learn more with me in 1 week on my trial than you will anywhere else on the interwebs. And if you have any questions along the way, don't forget to give us a shout using that live support button on the right-hand side of the website. Hope you guys had a great Wednesday. We had to get through inventories. Pretty easy scenario across the board today. Everything was pretty much straight up. So mostly just buying opportunities across the board. Always an easy opportunity when we see nothing but straight up markets. That was pretty good. Looking at tomorrow's schedule, Thursday, June the 9th. We'll take a look at the calendar here first, and then we'll jump into charts here in just a few moments. Before we look at tomorrow, let's look at tonight here. We have some important news coming from our good friends in China. The CPI number at 9:30 p.m. Eastern Time. If you're going to be trading in Asia in the overnight session, on the lookout for that news coming out at 9:30 p.m. Eastern Time. Chinese data is always going to be some good bang for the buck. So be aware of the volatility that comes out around that news data tonight at 9:30 p.m. And then tomorrow morning, Thursday, June the 9th. We, of course, don't have much to work with here in the London session. We go down to 8:30 a.m. We'll be opening up our trade room at 8 o'clock Eastern Time tomorrow morning with all of our students here at School of Trade, and we'll have pretty much your typical Thursday scenario. Jobless claims, which it's a red star news event, but we really don't see that much impact these days on the jobless claim ever since, of course, the job market started to kind of turn around a little bit. Jobless claims at 8:30, again, we're not expecting too much out of jobless claims. A little bit of an impact might come in on crude oil on the natural gas report at 10:30, but really there's not much to say about news tomorrow. Really the big news is coming out of China tonight, and so tomorrow in the, at least tonight in the Asian session, tomorrow in London, they will definitely be trading the reaction to that CPI number coming out of China overnight. And then hopefully we'll get a boost off that jobless claims tomorrow morning and kind of get these markets moving early in the session for us. Come out and join us tomorrow morning, 8 a.m. Eastern Time, and we'll do it all together. We're going to start out tonight with crude, S&P, gold, and we'll wrap up with the euro. Crude is bullish and trying to complete a measured move this evening, but the most recent move, this bull move, looks quite exhaustive, which tells us to beware trying to buy the highs and wait patiently for a deep pullback to support levels below for the most reliable buying opportunities tomorrow. Looking at this chart right now, you can definitely tell the market is bullish. We do want to buy. I look at these last few candlesticks, though, and you can see here the biggest candlesticks of the day came right at the end. Now, at first glance, you would think that's excessively bullish, but when you put it in context of an overall bull market, this does have the feeling of exhaustion. And when you see that big red candle come afterwards, you definitely have the feeling now that this is an exhaustive move going higher. The key to looking at exhaustion is the candles get larger, right? Almost as if the noise keeps getting greater. As the candlesticks get larger, as this price moves higher, although it's a green candle, buyers and sellers are scaling into it as it's going higher. Again, it's a green candle, but because of the size of it, we know there's a lot of chop going in on the way higher, and we assume this is going to be billed as exhaustion. When I see an exhaustion candle like this, the first thing I think of is there are going to be stop losses, there are going to be sellers waiting right above that high. So we can pretty much assume that buyers are going to try to buy this thing up, but I don't know how much I feel comfortable buying near that high right now, just because we do assume there are going to be some fade sellers coming in, some counter trend sellers trying to sell that move because they see this is such an exhaustive move. And with that measured move overhead, they'll look to take shelter into that resistance. Most important thing is this is a bull market. We know we have a bull channel. That bull channel you can see here is trying to rotate up to its highs right now. Pretty good rotation. This was an inventory day, so we're not expecting this thing to look perfect. As you can see here, it kind of rattled around the highs. It rattled around the lows. We assume this bull channel will have an ultimate target back up at that high. But remember, though, we always want to buy the low of a bull channel, right? Really, what I look at this as is a bull triangle. I think that's a much more accurate way of describing what this market really is. It's a bull triangle, and a triangle is a trading range, and that trading range now, we're up above the highs. So you're going to want to wait for this market to pull back and look for that next buying opportunity at a little bit cheaper price. So bull channel, definitely expected to be used as a target overhead, but then of course we have a measured move, 51.70, the high of that bull channel, obviously the measured move up top there, that's the ultimate target. But again, combining that with what really is seen as a triangle. Triangle, of course, tells you this is a trading range, and we, of course, are dealing with a breakout of a trading range. Very reliable that it will pull back inside that trading range at least once and then try again, right? Most breakouts of ranges fail. So assuming this is a trading range in the triangle, this will break out, pull back, and then give you another shot to get in at a much better price. Most important thing right now is finding those areas of support. 51.34. 51.15, 51.14, these are all going to be important areas of support. Here's a really good example of bull exhaustion breaking through the highs of an overall trading range on a bullish day. We do want to buy it, but we're looking for price to pull back. For example, if it pulls back to the triangle, we then look for sellers to try to sell the next pullback. We know where their stops will be. We're looking to buy into their stops. Failure into strength. Strength into pullbacks, and then pullbacks right back up. The problem we have right now is we just don't know how far it will pull back. And remember, it may actually just get bought up right now and finish off that measured move. The problem is right now is I do not want to buy high, and I do not recommend any of my students buy high. We always want to buy at a cheaper price, and right now with exhaustion coming out of this breakout move, we do want to wait for that pullback. So gamblers, you're more than welcome to buy this little pullback here, but what you're doing in this situation is, and we're going to see an example of this on gold tonight, if you buy now, what you're basically doing is trading reliability for risk, right? Where would your stop loss have to be? That's the big problem. If you buy now, your stop really needs to be back here. It needs to be back here, right? So you get a lot of risk on this for only a little bit of reward. If you buy now, a very high reliability, right, that it goes back to that high. It's a very bullish market. But will it go through that high? Probably not that much further through it. Maybe it gets that measured move. Maybe it doesn't. But the reality is the risk is all the way down here, whereas the reward is right here. Now, there are lots of traders that do this for a living. They trade reliability for risk. Right now, you have to make the decision. Are you okay with a little bit of profit with a big amount of risk? You'll probably have an 85% winning ratio, but the problem is that 15% that are losses are going to take back all of the profit you make on the winners. And most human beings, once they take a few of those big losses, they're not going to have the confidence to keep trying that game anymore, right? So just be aware of that. If you buy now, reliability will be high, but risk is going to also be high, right? So you're kind of trading that reliability for the risk. It's always a little bit better, at least in my opinion, especially for a new trader, to wait for that price to pull back, look for sellers to try to sell it lower, and then look for that failure. I'm looking for areas of support, right, as this price pulls back. Then you'll be able to have a much greater level of reward, right, for a much smaller amount of risk, right? Lower reliability, but much greater reward on the trade. Got a good plan there for the crude. Again, right now, we're definitely bullish, but I don't think a lot of professionals right now are going to want to buy at this expensive price. Wait for that pullback back to an area of support. Look for those sellers to try and fail and get the party going back to the high again. Next up here, the S&P. The Emini S&P is bullish and trying to break through the double up resistance level on the way back to completing a wedge target overhead. This tells us to look for a trap low or a breakout pullback for the most reliable buying opportunities tomorrow. Kind of an interesting situation here right now. Remember, the S&P is highly correlated right now to the crude oil futures. Remember, there's no causation, it's just correlation, which means it's very difficult to actually make consistent, keyword consistent, profit from this correlation. Don't confuse the terms correlation with causation. Okay, so we do know that this move looks very similar to crude oil in the sense that we had a bull market to begin the day today, right? Market starts out with a bull market. It then pulls back. 10:30, there's your inventory report, comes out on crude. Traps low like a lot of news events does and shoots back to that high. We're definitely bullish. There's no question about this. We have a bull channel, right? That bull channel, again, not the prettiest thing in the world. We do expect that on major news day, but we do have an A to B, back down to C, and of course that target now for a measured move and that target for the top of that channel, depending on when we get there, is going to definitely be in play. So measured move target up at 23.5, channel target overhead, but then we have the wedges. There are two wedges here. We have a bull wedge that started the day off. This will probably take a few days to get to, this 21, 28 and 3/4, right? Maybe call it 21, 29 up there. Remember, whenever we have wedges, wedge targets are going to be where that, right, where the fine point is going to be of that wedge. It's a range. It's very difficult to tell exactly where that wedge target exactly will be, but that's definitely telling us to keep looking for those opportunities up to that wedge target overhead. I think the more reliable wedge is going to be the most recent wedge you can see here. Kind of a funny wedge we're seeing right now. It almost looks like they just are respecting the midline of this bull channel with some higher lows right now. So if I had to guess right now, this is going to be the wedge that really is going to be the big impact player, at least in the next 12 to 18 hours right now. Again, this wedge target is very much a range around that 21 to 22 area. We never have the ability to really nail down where those wedges are going to be. So just be aware, in that area between 21 and 22, that's where your wedge target will be. Most important thing, whenever we find a wedge, is just to keep looking for those buying opportunities on the way up to that wedge target. Once we get up to the wedge target, look for that two-legged correction, and then back up we go for a double top. Once we see that, then it's either going to be breakout pullback to continue or new lower low and full-blown reversal. So a couple things here right now. Right now, wedge target. Go back to the chart now. Here's your wedge. And again, we know we want to follow the direction of the wedge, follow the direction of the channel. Again, we talked about that earlier. We're looking for that channel rotation from low to high, high to low, low to high. That's kind of the big picture move right now that we're looking for. Most important thing, though, are these wedges. Again, the large wedge gives you kind of a multi-day target, unless, of course, the S&P really makes a run tomorrow. I would imagine that 21.80, again, 21 to 22, that's where your important area of resistance is going to be right now. And, you know, buyers right now are looking for opportunities to get long up to that wedge target. Now, with that said, we have a double up, and that double up, I think, is really going to be the most important clue right now. This double up number, using this first swing here of the session, that double up is acting as you can tell, major resistance, right? They get up to it once, two-legged correction, back to it again. Remember, whenever we have a symmetrical area or really any major area projected in the future, we expect to see it test, two-legged correction, and then double top, just like we do for a wedge. And you can see that right now. First test, of course, is right here. Two-legged correction back to a new low, trapping in those sellers, and then catch those sellers on the wrong side of the market, right, for a